Okay, hello everybody. Trying this again real quick. I got like 2 minutes in the damn video and the internet went out. But here we are, it's your boy Crypto Wolf back again for the second time apparently. And today we're switching it up a little bit rather than doing the overall market analysis. Today we are doing a quick look at a number of popular derivatives exchanges. And leading up to in the near future here, trying to get into, even if it's not necessarily live streaming of trades, I'd at least want to do like some chopped up video, maybe showing the entries, showing the exits, take profits if it's in there, and kind of patch it together, show the the profit loss and all that good stuff. So coming soon to a YouTube near you. But coming over here to the quote of the day: you don't get results by focusing on results, you get results by focusing on the actions that produce results. Such as if you are starting a trade and you're thinking, all right, we got this gigantic pattern going on, starting down here, say we got this big old pattern coming up here, and you're expecting it to come all the way up here and bounce off, and you're thinking about how much money you're going to make. You got the calculator out, you're working it out in your head. I got this much leverage. And before you know it, things start to turn on you, maybe start coming down, down, down. And by the time you accept the fact that things have gone opposite the way you want them to, and potentially might not be going back the other way anytime soon, maybe you're in the red, maybe you're in a loss, maybe you just came back to a break-even point. But if you were to stay focused on your indicators and the environment, you may have noticed that it wasn't just a quick little pullback. So, stay on the task, and the results will come when they come. If you're putting one foot in front of the other, eventually you're going to reach your destination. But all right, real quick, we're over here looking at the Bitcoin chart before we get into the exchanges. Over here on the 10-minute, just seeing what we're doing right now at the moment. We did have this little upward uptrend going on in the momentum waves, but that got broken to the downside. Now RSIs are pointing up. We are kind of coming back up out of this. They came together, crossed, and it almost looks like maybe we're spreading back apart again. Interesting. We'll see where that takes us. VWAP on the upside, not a big pump. Keep in mind it is the weekend now, at least for the markets. The main exchanges, specifically CME, is closed for the weekend. So we have had this habit of doing a lot of sideways action over the weekends. I mean, even if we continue up along this fan line, it would be an uptrend overall, but we'll see what happens. Jumping out, let's go to the 4-hour real quick before we do that, and let me hide that guy. Looking at the 4-hour, we are reapproaching a spider line that has had a good amount of support and resistance every time we approach it, almost every time. Looking down here, we got that little apple bottom forming with the double bearish money flow going on. VWAP crossing over to the top side now. So we'll see what that gives us, even though, again, at the lowest point, at least in this swing low on the money flow, where we go, nobody knows. But there's a chance we go up. RSI, we came into the green over here. I hesitate to call this the bottom, but again, if we get into choppy weekend nonsense, we could kind of flutter about, maybe continue on down with that RSI. But we'll see. We will see. We have been getting a lot of these little bunny hills here where we're coming up, coming right back to where we started. kind of consolidating a little bit in between. So we'll see. But now going into the exchanges, I wanted to start here. It's CoinMarketCap. You all know it. You maybe love it, maybe hate it. But this right here, you can go to the exchanges menu right here. Spot, derivatives, decentralized. I'm on the derivatives at the moment. And it shows you the exchanges with the highest volume. So obviously we got the big dog on the block. We got Binance, number one. 51.3 trillion volume in the last 24 hours, and they're down 15%. But number two, we have OKX. Now, I imagine, especially over here in the US, a lot of you may not be familiar with OKX. Lucky for you, I'm about to break it down for you. Show it to you here in live time. And then number three, everybody's classic, bybit. You know, likely the first exchange that many of you may have been trading contracts on. I'm going to show you that one too. And you got BitGet. Oh, and again, to go up, OKX 22.3 trillion compared to Bybit's call it 9.5 trillion. That's a fairly significant jump in 24-hour volume. Now, we've got bigger open interest on Bybit compared to OKX. But we also have the number of markets. OKX coming out hard with 232 different contracts, different markets. Bybit, you know, they've been adding stuff like crazy lately. They're up to 110. A lot of them are just these little coin projects that, frankly, I don't know, most people probably don't even know about. You know, Binance 191. Again, the big dog. But coming down here, we get BitGet at 8.5 trillion. Coin Tiger. Now these two, I've never even been to these two. Coin Tiger sounds kind of cool, but I don't know. You know, 8, 7. Then number 6 here, BitCoke. 6.7 trillion. Yeah, down a little bit, but so is everybody else. Now, open interest is a little lower. We're down here in 680, call it 687 million. So not super high, only 31 markets. But I am going to show you this one because this guy here was nice enough to not go the KYC route, which we can all appreciate, particularly my fellow wolves on this side of the pond. And then we go to FTX. You know, you got your 6.4 trillion. Bing X, never heard of them. DigiFinex, never been there, heard of it. Huobi Global, you know, the viewers, especially out there in Asia, you probably heard of them. KuCoin, I'm sure a lot of you have heard of them. You know, real big on low caps. They got all kind of different coins, particularly in the spot, you know, purchasing or spot trading, I guess you could say. And then we have probably one of the more well-known ones lately, phemex, which, you know, if you watch Crypto Face, you can see he's using phemex. You know, a lot of them, like, you know, Carl from the Moon. I think Crypto, Chris is over there using phemex. So this has been a big one lately. Big drop in volume, but 560 million open interest, so not super huge lately. Gate.io, you know, I've seen this name come up plenty of times. You know, 2 trillion open interest, so there's a lot of trading going on at the moment. Volume not super huge, but, you know, in the 3 trillion range, along with, you know, most of them in this area here. Skipping down. BitMEX, fairly well-known one, only 1 trillion, but 3 trillion open interest. So, you know, they're doing a little bit of business. Crypto.com, only 883, but with 2.6, 69 pairings or markets. Look at this guy, MEXC 191. That's, I wonder if that's like a Mexican exchange. Could be, maybe. AAX, Bitfinex, another OG, started back in 2012. not terribly big on the volume or open interest. Kraken, matter of fact, I think I've got an account on Bitfinex even, but definitely have a Kraken account. I think that was like my second or third exchange account that I ever opened. You know, OG from 2011. Not putting up huge numbers, but they're there, particularly for US customers. Poloniex, another pretty old one there. Not doing very much at all for how long they've been around. They need to get that marketing game going a little bit better. So let's get into it here. We're going to start out with the classic bybit. Which is not that. There we go, bybit. Yeah, I lost internet connection there for a minute. All right, hold on one second. Let me log back in here. There you go. Watch the pretty chart. Yeah, capture. Do. All right, here we go. So over here, looking at bybit, you can see your little order history. So you can see, you know, I've been using this one for quite a while now. And this particular account is actually like a little practice account that I'd set up from the very beginning. And, you know, I've withdrawn and deposited, you know, Tether from this account God knows how many times at this point. I generally try to keep like 100 in there just to try out new things, try out little strategies. Even if it's like a super sketchy trade where I'm like, I don't know, maybe, possibly, probably going to turn on me, but I want to see if this works. You know, I'll come over here. This is kind of my sandbox account. And close the little notification. So you can see, you know, up here you got your main menu, which is all the same stuff, you know, markets, you got your different trading, whether it be Tether, Bitcoin, USDC, which I've been happy to see that they have actually expanded this USDC list pretty decent compared to what they had before, which at one point was like nothing on that one. All the Tether pairings just keeps growing and growing and growing. You can search, or you can do these categories. You can do all the DeFis, the different NFT related ones, the metaverse related ones. There's one called Shill. Ugh, what a terrible name. GameFi, proof of work, proof of stake, stablecoins, smart contracts, launch pool, launch pad. You get the picture. They got enough now that you can kind of break it up into different categories if you're looking for something in particular, or you just want something in a certain genre. So that's the trade menu. Derivatives, where you got Tether perpetual, inverse futures, USDC perpetual. I honestly don't know what the VIP program is. Looks like that's something new. But generally speaking, at least for this account, I've got Tether on there. So I'm over here in the USDTs. And if you don't know what a perpetual contract is, here's your contract details down here in the corner. But what it is, so in regular futures trading, you have a contract, and typically speaking, a contract has a, whatchamacallit, it's like a, not a maturity date, but it's, think of it like an expiration date. So if you buy the contract, say you're going long on S&P and you're buying a bunch of contracts, and the expiration date for those contracts is, say, let's see, it's March 11th. So say it's March 30th. So if you are holding those contracts when they expire, you then have to purchase the stock for the price of that contract, you know, what it is, the particular contract that you bought. Because essentially what you're doing with the futures is, say there's, you know, contracts at a bunch of different prices, and you say, all right, I want to buy Bitcoin futures for March 30th that they're going to be 39,158. And so you're betting that by the time you get to March 30th that the price is going to be greater than 39,158, but that's the price you're going to have to pay for it on that date. So if the price did go up by then, you're paying for that Bitcoin less than the actual prices at that time. Now this isn't, you know, related to this too much, but hang with me here. And the way most do it is, if you buy it at, you know, $100 and it goes up to $150 by the time contract expires, then basically what they'll do is you quote unquote, you know, buy all those shares or coins at 100 a piece. And since the price was up, essentially they just give you the difference, and that's your profit. Because you don't really have to worry about the getting into the nuts and bolts of it. Like, you know, okay, you buy it, but then they come back and sell it, and then they give the profit to you. It's just, think of it like, if the price goes up by the expiration date, then you're making that much money. But if it goes down below, then, you know, you're losing that much money, because you are forced to purchase the asset for a price higher than it actually is at the time, because you're betting on what the price is going to be in the future. That's why they call it futures. Now, for perpetual contracts, these contracts never expire. So you see, let me zoom this in here for you. You see expiration date perpetual. So the contract never expires. So if you were to purchase, you know, a book of contracts, a block of contracts, and you held them for a year, you know, it's never going to expire. You're never going to be forced to purchase the actual Bitcoin on an expiration date. You can hold those contracts as long as you feel like paying the interest and potentially the like funding rate, if it happens to be you know, positive or negative, depending on whether you're long or short. And I'll get into that here in a minute too. So on the contract, you've got your index price, your mark price, and the mark price, this guy here in the yellow, and is derived by index price and funding rate and reflects the fair market price. Liquidation is triggered by the mark price. So if you're in a trade and your liquidation price is down here and the price comes down there, it's this one here that determines if you get liquidated when it reaches this. Now, they're generally not terribly far off. You can see 39,102, 39,117. So you don't have to really pay too much attention to it. If you're really splitting hairs with your liquidation like that, you're probably doing something wrong off of it, because you shouldn't be getting liquidated. Open interest, again, what we were seeing on that other one. So for this particular asset pair on this exchange, there's, call it 20,000 Bitcoin open interest. Again, measured in Bitcoin, not dollars. 24-hour turnover, like 4.5 million Tether. 24-hour volume, 113.6 thousand Bitcoin. And then you got your risk limits, your contract value. And if you click more, you could get further into the details and the weeds. You got your interest rate and all this good stuff here. Initial margin increment. Feel free to dig into this. I'm not going to bog the video down by going too heavy into those briar patches right there. Boring information. But coming back to the exchange, You've got, and just, this is just bybit stuff. Other stuff they have that, you know, a lot of exchanges have nowadays. You got your earning, they got the NFT marketplace, got, you know, bybit learn if you want to learn what some of this stuff is, whether it be, you know, margin or index or mark price or funding rates, all that good stuff. You can generally, each exchange has like a little academy, a little glossary to explain what all this stuff is. Different rewards, blah, 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 blah. Contract info, pretty much what we just flipped to a minute ago. And then you come down here to your next little bar here where this is your favorites bar. So you got the little yellow stars alongside all the different asset pairings. And if you click them, adds it to your favorite list, which adds it up here. So you can kind of keep an eye on other coins, other tokens while you're on this specific chart. Then you've got, you know, your main asset information. You got your price, volume change, high, low, turnover, funding rate, and countdown until funding rate expires. And so what the funding rate is, and it's something to keep in mind, particularly if you are holding your trade for a longer period of time, specifically hours. So the funding rate basically, I don't know what the interval is here on Bybit. 8 hours. Okay, same as others. So every 8 hours, whether if you're in a long position or you're in a short position, one of those is going to pay the funding rate and the other one will actually receive the funding rate. So in the case of a positive number like we have here, positive 0.01%, the longs will pay the shorts. So if you're in a long, you're going to pay that funding rate when that timer runs out. And if you're in a short, you're going to receive that funding rate when the timer runs out. And then vice versa. If this were a negative number, the shorts pay the longs. So if you're in a long when this is negative, you actually receive the funding rate. So essentially it's like they're almost like they're paying you to go, you know, longs or to go short, depending on which one it is. And the way they figure that out too is the mark value times the funding rate. So again, your mark price or mark value at that particular moment times that, and it goes per contract that, you know, you have purchased. So irrespective of how much margin you are using, it matters how many contracts you have. But okay, now that we did a little bit of the technicalities, obviously you got your chart. It's basically a kind of scaled down trading view chart, as you can see here, chart by trading view. You can add indicators. You know, you come up here to your indicator thing and it's got, you know, your nice big list of embedded trading view chart indicators. You got your, you know, your buy sell price, your current right there at the call it the top of the order books. You also have, you know, your different chart types. You got standard, your standard bybit chart, your trading view. And this yellow line here is actually your mark price as well. Now, something interesting you might notice is the candle isn't moving, but the mark price is moving, and it tends to get ahead of the price movement a little bit. So if you were over here and you see, okay, well, this thing's tipping up, like it's kind of bouncing upward, you know, okay, well, this price candle might be following that. You know, not 100%, but, you know, if you're down here on the 1 minute looking for entries, you can see it moving right there. Not right here, we're like straight horizontal, so it can go either way, but here you see it's all right, it's pointing up a little more, it's pointing up a little more. It's kind of getting some green leanings in the candle there. But moving on, you guys know how to look at a chart. You got your order book. You know, you got your sells and your buys total per this price contract. So like figure each one of these, and they do theirs in increments of 50 cents. You know, the total per that price level, the quantity of Bitcoin. And you can change the increments to, you know, 50 cent, 1, 2, 5. And again, you can also change this so it displays, you know, red over green, green over red, all green, all red, your bids and your asks. And then recent trades just shows you, you know, what's, you know, what trades are executing right now. And before we get over here, come down here, your position. So if you place an order, it'll show up on this active list. And I suppose we could put one, we could put one in real quick just to show you, but let's see here. What should we do? What should we do? Getting some curvature back sideways here. This is the 1 minute. I don't want to look at the 1 minute. That's on the 10 minute. VWAP coming to the downside. Getting super choppy with this money flow. Spreading a little bit on the RSIs, curving back to the downside. Getting a little red X. All right, here's what we're getting. Well, hold on. I'm going to do it. I might as well do it. Come over to the 1 hour. Again, VWAP curving out to the side, but generally kind of coming down. RSI splitting as we came up, starting to turn back down. Money flow getting deeper. All right, we're going to do a short. So we come back here. And let's say, since this is just a sandbox account, I don't normally recommend doing half of your entire account, but I guess we explain this one here. So open, close, we are opening a trade. We are on isolated, your different margin modes. You have cross and isolated. There's a little explanation here. Basically, you want to be on isolated. And then you've got your leverage amount. What are we on? Bitcoin? Okay. That, you know, for this example, I'm going to leave it at 5 for your long and your short. It also shows it up here. And we want to limit, because if you're a market, you are a market taker and you have to pay the taker fee. If you're a limit, you're a market maker and the fees are less. Conditional is basically just trigger price. Once it gets to that price, do you want to trigger a market or a limit? But we just want to run it. So let's say we did 50%. You could come over here to the order book. So you pick that, went there, open long. And as you can see, we have an active order. Shows it here, which is one thing that I very much like, is how you have these little boxes that show your order. It's got a little dotted line, which is kind of hard to see at the moment. And, you know, the quantity, your order price, how much is filled, trade type, take profit, stop loss. You can set it ahead of time if you want to. You know, limit order, status is active, and then your number and time. Of course, and what the contract is, Bitcoin USDT. Entire order has been filled. So now we're off the active and we're on to positions. And you can see fairly similar. It shows you your margin below that, your entry price, mark price, your liquidation price. So if the price reaches this, and oftentimes it will start to close your position prior to getting there. Hey, look at that. Your unrealized profit, which is essentially, you know, what your trade is at the moment. Now you got to keep in mind, even though, oh shit, I long, didn't I? I didn't want to long. I said I was going to short. Got me all distracted here, but whatever, it doesn't matter. It's like 20 cents. Let's see. We'll see if it bounces back up a little bit, although I should probably just close it now. But anyway, so your unrealized profit is where you're at. Your realized profit is what has already, like, say you took profits, or, you know, you close it, now it's realized because you haven't actually made that profit until you close the trade. Which, you know, I'm just going to do it. You know, close by. You'd rather do it by limit, again, less on the fees, but if you want to, you know what, screw it, let's go bigger. Oops. You can also drag your order, hit confirm, and it'll actually change your order to where you drag it, which is really cool, especially if you have like a stop loss on there, or you are trying to do like a market close. You know, you can drag this guy, say you want to set a stop loss, you know, down here, obviously not on a short, but if you were going long, say you want to set a stop loss below this bottom right here. This is going to be a bad example, but let's just say, okay, we threw it at 10%. It will also tell you your expected loss will be negative 10% or 550. So in this case, it's going to be above it though, because we're in a short. There's our stop loss. And if we wanted to, we could drag this guy down here and say we want to put it, you know, above this high point or something. And there's our stop loss down there. You could do a trailing stop. Not terribly recommended, especially in crypto. If things start getting volatile, you just get knocked out like immediately. Now, I'll get to that in a second, but if you click back on this, it'll see, okay, so now when we hit our stop loss, we'll be down $1.62, negative 3% basically. So it's kind of nice that it actually gives you a number. You don't have to figure it out on your own. Now, the trailing stop, you know, say you were coming up here, you're going parabolic, you're spiking, and you don't want to just keep dragging your stop loss and chasing the price, but you know, say you're going so parabolic, you're like, all right, as soon as this starts coming down, it's going all the way down. I want to try to close it as close to the top as I can. You can turn the trailing stop on, or, you know, you could take your stop loss and just keep dragging it up. But keep in mind, the stop loss is a market order. So you will get hit with a little bit more in the fees than if you were to do a limit close. So things to keep in mind. This ADL is your priority in the queue. So if you came in and hit your stop loss, you know, other orders are going to be getting filled before yours. So if you were really spiking and you tripped your stop loss, it's going through the order book, filling, you know, all the buys until it gets to your order, but the price might be up here before it actually gets to your order, which could put you in a further loss than, you know, where this actual line is at. You know, say it closed, it's kind of an extreme example, but say it closed up here, you know, you'd be going from 60% to 1%. Things to keep in mind. Plus, don't forget to take into account that's 5x. So 1% is actually 5%. But yeah, so there's your order down there. And if you have, say you know, went over to the Ethereum chart and say you put in an order over here on the ETH chart, it'll show up below it, you know, for as many as you enter. And so coming over here just to explain our little order panel over here. Again, limit, market, and that's nice. If you hover over stuff, it gives you a little tooltip. And if you don't know, yeah, market order is, it's going to find the closest available. So say you are going long, so you're buying, it's going to find the closest selling price that it can get. Now, if you have high liquidity, it's really not a problem. But say you're over on some other exchange that has really low liquidity, or you're on a certain coin or something where there's just, you see, you just get a lot of straight little horizontal dashes, some little spikes, spike up, spike down, and it just looks ridiculous. Matter of fact, I could show you. Let's go down to the bottom here. That one's actually not terrible. So here's one with low liquidity. And you just get these tiny little candles that are just flickering back and forth because there's not enough volume, to really get your normal price action. You kind of get these little sketchy ones here. And this one actually isn't even super terrible. Let's see, maybe if we do the 1 minute. Yeah, you can see it's kind of jagged and kind of rough. Although this one's better than a lot of the really little stuff. But, matter of fact, I know. You get this crazy little jagged volatility. And sometimes you'll literally just get straight lines when there's just like no trading going on whatsoever. Like this, you just get these straight lines. But if you were to set a market order, say you want to go long, set a market order here, and there's just nobody selling at the moment. Somebody puts an order in to sell down here, guess what? Your order is going to fill down there. So just things to keep in mind. That's why you always want to go to an exchange with more volume, more liquidity, and you want to pick an asset that not only has higher liquidity, but has more regular price actions. That's why you hear a lot of people like Crypto Face, saying that when they're acting like shit coins, and he doesn't like to trade them. That's why you get super high swings when one person can swing the entire market and cause a huge candle, and then everybody starts jumping in, then just dump it. If you remember, he did it on a live stream once. A bunch of us joined in and we drove the price of AMP up and then dumped it right back. So yeah, that's why you generally want to stick to the blue chips, if not just Bitcoin and Ethereum, but other stuff works good too. It's personal preference. So that's the things to watch for with the market order. Conditional. Set your trigger price. You say, okay, if the price reaches, 38,930, if it comes below this bottom, I want it to do a limit order. You type in, whatever the order price you want, the quantity, just like you would on a normal limit, except the order doesn't get put on the books until you reach that trigger price. And you can have it be last index or mark. If you want, what you regularly assume is like the price action, do it for the last. You can set your take profit stop loss ahead of time, if you're doing long or selling short. That's the equity. That is the total amount you have in your account. Available balance. And again, derivatives account, there's like spot account that's separate and all that good stuff. But, there's 56 left in here because we have this trade currently open. Transfer assets, you can add more to it, deposit, exchange, buy, blah, 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 blah. And that is bybit. And as you can see, oh my gosh, we're down 26 cents. Oh, good golly grief. It shall be the end of us. Uh-oh. Turning red. It's turning red. Oh my gosh, it's coming back, it's coming back, it's coming back. Oh my god, we're down 3 cents. Oh, it's going. It's going. We're gonna flip it. We're gonna flip it. Come on. Come on, big fella. You can do it. Come on, little guy. Yeah, that's what happens when you end up over here on like the low 1 minute, 5 minute charts, and you're like sitting there waiting until you start getting a little further away from your entry price. And then you're just kind of like, hey, feeling like the Fonz, we're good to go. But as you can see, I got an RSI down here, and yeah, potentially we got room for this RSI to come down. But usually I will keep these on separate screens. If you have multiple screens, I'll keep, you know, this exchange over on the left screen, and I'll keep Trading View with Market Cipher open on the right. You know, maybe some music or YouTube video playing on the top right. I don't know what the hell I usually keep on the top left. Depends whatever's going on. But tell you what, I'm not going to babysit this. I'm going to set that stop loss there. And just to show you again, if we hit the stop loss, we'll be down 1.4%, 76 cents. You know, not moving and shaking anything with this little trade. Again, this is good for, especially for new traders, you know, because I hear a lot of people want to go and do the paper trading. They want to get the practice account. And, you know, you sit here and do all this stuff, but you're not doing it with real money. And I'm telling you, even if it's, you know, even if you only got $100 in the account, especially if, you know, if you're not rich, you don't have a ton of money, doing it with real money is better training because A, it's just realistic. So, you know, if there's real money on the line, you're going to start feeling a little emotional about it. If it starts turning on you going the other way, you're going to be doing all that second guessing. You're going to want to do the flopping and groping. And that's when you want to train yourself to, you know, to get over that, to not experience that fear. You know, if you have to, start cracking jokes about it, start just being goofy with it, whatever it takes at first to just, you know, get over that fear. Now, obviously there's a time when fear is warranted, you know, when you're really turning back and, you know, say you're breaking the previous high on a short or you're breaking the previous low on a long. You know, you want to be looking at your market cipher and seeing what's going on and be realistic about, you know, what's a certain point that you're going to say, all right, I'm cutting this trade if we get to this point. You know, short of some great extenuating circumstances, if we hit this, I'm cutting it. And, you know, have your strategy and stick to it. So let's move on. Next let's go to phemex over here. You know, not the biggest out of the bunch. Actually, it's the smallest volume out of the bunch, but it is well known, especially if you're watching traders on YouTube. And this is it. This be phemex over here, or phemex, as some may call it. And again, I am not sponsored by any of these exchanges. I don't even have a affiliate code, none of that stuff. I really don't care. I'm here to teach. You know, I'm not getting any money off these guys. You know, trading is that's where I want my profitability to be, is in trading, and me getting better at trading and hopefully getting you guys better at it as well. But I'm not trying to profit off of you guys, basically, is what I'm saying. So you see we got our chart, and it's a different layout, but you can change. You see these little corners, these little handles. You know, you can change the panel sizes. Now this one on the left over here, I don't even know if you can change it, because it's not like a normal window where you go over the line in between and you can stretch it sideways. So I think this just is what it is on phemex. Again, you got your order book. You know, you can see it looks like we got a price wall right here on the buy orders, on the long johns. You could also see, you know, your depth chart here on the order books, should you want to. And again, down here where you got your active orders, if you place an order, your conditionals, orders that filled, closed positions, open positions, order history. Same thing as bybit, same thing you're going to see with everybody else. You have your order panel over here where you got your limit market conditional, just like bybit. You know, minimum quantity is one contract. select market where you got all your pairings. Look at Luna bumped up to number 3 on the list. Man, Luna's been doing things, making moves. Nothing all that special at the moment, but it was pumping earlier today a little bit. And so, you know, enter long, enter short. That's your quantity. So say you want to do, say you're doing a 10% of your account. 10 contracts, limit price. Your available balance, the cost of this particular trade where you have it. You know, you can see cost goes up. Cost per long, cost per short. Again, with the funding rates. Come down, you got your advanced. And you can hover over these, tell you all about it. Reduce only order will only reduce your position, not increase it. If this order would increase your position, it is amended down or canceled such that it does not. Bracket order are designed to help limit your loss and lock in a profit by bracketing an order with 2 opposite side orders. Sounds to me a lot like take profit and a stop loss. Look at that. Take profit and a stop loss. Post only. I assure you it's not talking about Post Malone. It says the order will not execute immediately against the market. Used to ensure a maker rebate. If it would execute against resting orders, it will cancel instead. GTC. These orders will always remain open until they are filled or the user manually cancels them. Damn, I forget what it stands for. I'm having a brain fart. Anyways, IOC, a portion of these orders will be immediately filled at the target price, and the portion that cannot immediately be filled will be canceled. Oh, so it's kind of like where you have all or nothing orders, or what is it? Immediately or cancel is the IOC. So GTC is basically all or nothing. Maybe, I don't know, maybe just all. FOK, these orders will be filled immediately at the target price or else they will be canceled. They're different from IOC orders in that FOK orders will either be fully executed or fully canceled. No partial trades possible. So that's all or nothing. There we go. And your P&L history is your profit and loss history. Hide other symbols, basically just, I believe, keeps, only shows you the trades that you have going on for that particular asset. You can adjust your leverage. Why am I on cross? I don't want cross. Okay, you can type in a number. Oh, well, gotta find where to change that. I don't remember offhand. You know, maximum 20x. And again, your assets, this is kind of your wallet right here where you can buy more, deposit, transfer, your total equity, your balance, and your unrealized profit or loss. Then your contract details down here. Funding rate, see negative 0.0038%. Now, unless you're really doing larger trades, you know, if you're just sandboxing it, if you're a beginner and you're kind of practicing, you have a small account, like this one's only 484. It's really not going to make a very big difference. 2 hours, 38 minutes left till funding. And that is about it for phemex. You know, you got your basic info up here. Again, you got like your little favorites bar, just like on Bybit right here. And yeah, that's about it. And again, you can switch up the order. you know, where you want the various panels. If you want to make it look exactly like bybit, you want to, I don't know if you could, oh, maybe you can't drag this one over. Ah, you're stuck with it. So yeah, so that is phemex. Let me grab a drink of water here. Let me delete that out before I accidentally place an order here. Let's check back on our trade. How are we doing? Oh, we're down 19 cents. We're going sideways. So moving on, we got OKX. Now, I imagine probably a decent number of you out there have never used OKX or have not visited it. Same thing. You can rearrange your panels. Man, I wish I could shrink this down, but I guess that's just the way it is. You know, you got your various pairings, your markets, your different contracts. Tells you perpetual next to it. You also have futures, various margins that it's just straight up 5x. Your options, if you want to get into that. And your regular old spot pairs. And your favorite list. So we're doing the perpetual contracts. Now, I actually just created the account here a week or two ago. I haven't actually funded the account or anything. One thing interesting, it's got a bot list where you could throw a trading bot on there. A little asset wallet down here right in the bottom. That's kind of nice. You know, with bybit, you have to like come up here, go to this, go to, oh, here. Basically the exact same thing. Go here, jump to another page because you don't want to close out this page. So that's cool. They got a quick one down here. You'll generally see that things are mostly the same. There's almost always a slider. You know, say you got 10,000 in your account, and drag your slider to 50%. It's going to be 5,000. Open, close, isolated, cross. Again, isolated is essentially you are keeping your margin to a single asset. Like say you have some Tether in your account, some USD in your account, some Bitcoin in your account. You will get liquidated when, you know, essentially you wouldn't have enough Tether left in your account to keep the trade going and you reach your liquidation amount. If you had cross, and this is kind of how somebody described it to me, not saying I might have this perfect, but with cross, you know, say you're in a Atom USDT trade and you got your liquidation amounts right here and you're coming down. I guess potentially it could take from your Bitcoin position or assets to help fund the margin on that trade. Again, not 100% sure. Somebody explained it to me like that a while ago, and that was the general picture that I got. Matter of fact, here, let's see the tooltip. What does it say? Your position margin is limited to the value of the asset you are trading. When you are liquidated, your maximum loss is limited to the balance of that single asset in your account. Yeah, that's isolated. I'm on cross now. Come on, get it together. Open positions calculate margin and P&L separately. When you are liquidated, your maximum loss is limited to the margin of that position. Oh, okay. So sorry. Yeah, I said account. Just dawned on me. So yeah, isolated, it's limited to this specific trade. Whereas with cross, you know, it can close out other trades that you have to cover it. And again, you got your little margin slider here. 75. Woo-hoo-hoo. If you're a beginner, keep that margin low. Just saying. Wise words. Wise words being quoted. Pick the witness in this rap game. They sold it. Bow down. All right. So yeah, you get it. You know, you get a little calculator here if you want to figure out what your numbers will be. Your liquidation price, you know, prior to executing the trade. You know, got your fees there. What do we got? Market maker 0.015. So that is if you're doing like limit order. Market taker 0.03 if you're doing a market order. Which if you're letting it hit your stop loss, it will use the higher fee. So just a heads up. And again, same as most of the others, you got all your info up here. Click your little down arrow, you got all your assets, which makes this largely irrelevant. How do I get rid of it? That's interesting. Layout. Market goodbye. All right. Squeeze the chart over. Stretch her out. All right. I do like how they have the little the order book over here on the scale. That's kind of interesting. Again, this is the OKX chart, or you can go to, you know, the trading view embedded. But that's kind of cool. You know, I'm not doing technical analysis really on the exchange account. You know, I'm doing that over here in trading view with Market Cipher. What do we got? Moving up on the 1 minute. Oh, money flow coming back up. See, our size may be coming together. We may be going the wrong way on that one. Let's see here. Let's take a look. We may be turning though. Let's see. 17, 18. That's generally strong pressure. Money flow coming up. Let's see. 30 minutes. RSI together going sideways. Just crossed upward. Super sketchy right there. Probably a bad time to do a trading on the exchange example. Yeah, curving back sideways. Still got a split there on the hourly. Getting our little triangle here. Not, you know, confirmed or anything yet. What's the DBSI looking like? From 9 to 4, so from 0 to 4. So although one side isn't really winning out over the other, we are increasing on the bottom, decreasing on the top. $13.16, money flow kind of coming up, VWAP coming up on the 3 hour. Not that I even plan on holding it that long. It was more or less just to show you guys what it looked like. Yeah, getting a little increase over here on the momentum waves. Terribly weak money flow though. But actually it does look like it's kind of pointing up a little bit. Yeah, I'm going to close it. So come over here, limit. And if you just smash that 100%, it'll close her for you. So that is those. And I got one more left that I wanted to show you, which BitCoke. I'll be honest with you, I did not hear about it prior to looking them up for this video. And I'll show you how I came about deciding on that. If I can find where I learned that. I don't think it's even on this website. I looked up a list of derivatives exchanges that do not use KYC. And out of the top, I think it was like top 5, BitCoke, bybit, OKX, and phemex were up there. And I said, BitCoke, what the F is that? And I was like, oh, wow, it's that far above phemex with daily volume. That's interesting. Open interest, slightly above phemex. Interesting. So I went and checked it out. And it's kind of like looking through beer goggles. Kind of like looking through beer goggles, the way it's all kind of hazy. I wonder what... Yep, don't even have to set an account name. It's just, boom, sign up right there on the spot. Good to go. Gives you a randomized account. And you got your chart. This is your pro chart. You could do a split chart between, you know, various pairs or assets. Again, your regular old trading view embedded. What do we got here? Stochastic RSI, MACD, the Mac Daddy. What is this? 30-minute Ethereum. And the RSI is looking like we may swing down a little bit. MACD potentially kind of curving back up. Kind of broke that downward swing a little bit. Let's see what's Solana doing. You know, I will say I'm not a big fan of like this. I wish this were a little darker. Like it makes me feel like my monitor is like way too bright. I haven't played around with it all that much, so I don't know, maybe there's somewhere to change that. But I haven't rearranged any of this or anything else. You got your little order panel. You got your miniature little order book. You got your latest trades. Which it's kind of strange that the latest trades takes up more space than the order panel or the order book. But hey, what do I know? Then you got your various market list. Sandy, what's she doing? Nothing. Nothing. And then you got your spot, perpetual, finance, platform token. Jeez, what is it? Kilo. Affiliate, new user. I don't know what IEC is. But that's BitCoke. You know, it's easy to get an account. It's easy to start up. It's got relatively decent, you know, volume going on. I don't know about, you know, for some of the smaller coins, but if you're up here on Bitcoin, I imagine it's probably got decent enough volume. And generally speaking, you know, every exchange you're going to go to, they're all showing you the same stuff. You know, you could change the layout, might be a little different. They might have some different things down here in the little information panel. You know, it might be different colors, look a little different, but, you know, when it comes to trading, you know, you're always generally looking at the same data, same stuff. So yeah, you know, one thing I don't know that I can't say is if I set an order on here, or if you had like a stop loss or something, I don't know if you can drag it the same way you can as like on bybit. So I'd be curious to know if anybody's ever used, you know, BitCoke, OKX. Those two I just haven't actually started using yet. So far, I like OKX. I'll be honest with you. I'll probably use it. Yeah, curious to see if it does the draggable orders, because it's nice. It's on the fly. You're not going in and like, you know, say you have a limit set there. You're not canceling the limit. You know, writing up a new one, setting it. It's nice just to be able to just whip, drag, you know, set it down below a wick or set it above or set it right on the current price, whatever you might be doing. And that, ladies and germs, is our derivatives non-KYC exchanges. And just a disclaimer, I should probably mention this. If you happen to be at a US IP address, you may run into a little bit of trouble because you shouldn't be on there with your US IP address. So I'll let you figure it out beyond that. I'm not going to, you know, everybody follow your local laws and regulations within your jurisdiction. None of this is financial advice. I'm not telling you guys to go do that or anything else. I'm just saying, hey, this is what it looks like. These are the various pretty colors that you can see on these individual web pages. You know, you get a little bit of blacks and grays and blues over here. You get some friggin' coked out light gray beer goggled looking screen over here with some green accent. Come over here and you got basically just black and white with your red and green over here, and you come to this one and maybe you throw a little bit of gold in there too, because you know that's bybit's color, and that's what we're working with. So we're looking back on the chart here. What do we got? 12-minute. Still looking a little uppy. What's shaking? What's shaking? You know, took a bounce off the zero line there. Yep, money flow still, though, not looking great on the higher. What's the daily doing? Kind of pumping to the downside. Oh, yeah, hey, if you remember from the last video where we drew these lines right here, because we were kind of coming into a little bit of a squeeze with the momentum waves. Now, it's possible that we did break down a little bit, but it's also possible that we are just not at, you know, this trend line right here, because we were trying to connect to this guy here, but it could be that that's a fake out and maybe going to come back down to this line here, which, if that is the case, I lose my nice little intersection point over the zero line. So screw you, Bitcoin. Gotta go and ruin a good thing. Money flow going sideways. It doesn't want to break up into the green. 12-hour coming down in the red, down in the VWAP. It's going down in the DMs. Over here on the 6-hour, still kind of coming up, but in the immediate short term, we're pointed down. 4-hour, VWAP crossing up. Money flow looking horrendous. You know, possibly a bottom in here, but we'll see. You know, we've been getting stretched out a little bit more than that lately. So I will say one thing, it's getting shorter. You know, you go from this length to this length to maybe this length. Two-hour. What's this bastard of a time frame showing us today? Coming up into the green. Yeah, VWAP up on the plus side, kind of turning back a little bit. Not going to put too much into that. It's still on the plus side here. RSI's got a little bit of a spread going. And we've been working our way into a spread. So we got a little bit of weakness here. I mean, it's kind of going sideways, maybe even a little bit down. So maybe we got weakness to the downside, means either we continue going sideways or we could start trending up. Tough to tell. Again, it's the weekend. Things have been crappy on the weekend. So mind your P's and Q's. Don't bet what I say bet. Don't trade what you're not willing to lose. Looks like not quite coming up on that spider line just yet. Man, it seems like we're frozen in place. But that's it. I hope you guys got something out of it. Maybe you learned about a couple new exchanges that you were unaware of. Especially, you know, with the big exchanges going super deep into KYC. And again, you know, if you have a Binance account, you know, they do have, you know, derivatives on Binance. Same with like crypto.com, FTX, Huobi, you know, KuCoin, Kraken. You know, most of the big ones, they do have derivatives trading on there. But, you know, if you're just trying to keep it simple, you just want to, boom, go in, sign up, log in, drop some money on it, get to trading. You know, you don't want to wait however long it takes and have to, you know, send them your ID, a selfie, the friggin', you know, finger of your first child or something. I mean, it's nice. You know, it's a website. They have the service. You can use it. You get in, you get out, you do your thing. Bada bing, bada bang, bada boom. Beautiful thing. So I will see you guys tomorrow. Coming back with another informative video. Maybe try to focus on something a little bit more with the market cipher, while at the same time, you know, I want to start getting into some crypto explanation videos, like in general. What is crypto? What is Bitcoin? What is blockchain? What are smart contracts? So let me know what you think. How was this? What do you want to learn about? What do you think about these various exchanges? Are they garbage? Are they potentially good? Do you got beef with one or multiples of them? I'll let your boy have a fantastic evening, and all my wolves, keep your nose clean, keep it up to the sky, and howl at the moon. Peace.